Hello, viewers, and welcome to this Investonomics webinar on the Union Budget 2023 with a highly experienced fund manager, Mr. Sunil Singhania. He is the founder of Abakkus Asset Managers. He has over 20 years of experience in fund management and is, in fact, the first individual from India to be elected as a member of the CFA Institute Board of Governors. Good evening, sir.
Good evening.
We're really glad to have you here. So I'm going to jump right into the questions. First off, do you really think this budget has indeed laid the foundation towards a developed economy?
So, first of all, thank you, ICICI Securities, for giving me an opportunity. Really happy to do it. I think so. Today has been a eventful day. So you had the budget and you had the markets, and I think I would say both were very dispersed. So coming to your question, I think this budget has, frankly, disappointed no one. It has done what was expected and a little bit more. And I call it the 4S. It was a simple budget, not too many jargons, not too many, exquisite words. It was like very, very simple. It was short, like the speech was just over an hour. It was focused on structural issues, capital expenditure, infrastructure building, simplification of taxes, some benefit given to everyone, on the individual tax front. And last, it brought in a lot of smiles, at least for the first 1.5 hours after it was presented. So I think it ticked the right boxes. It laid down a path which was to make the tax regime simple. It laid down a path for the country to go into fiscal prudence. So, we are looking at a 5.9% fiscal deficit moving to 4.5% by FY26. At the same time, the expectations on tax collections and others were all reasonable. So the finance minister, the honorable finance minister, has not taken very, difficult to achieve numbers in its calculations. So I think all in all, very, very satisfied.
So in short, it's a good stepping stone to move forward from here. If you were to coin this budget in one word, I mean, last year the budget was coined the Digital India budget. If you had to coin and call it a name, what would you say this budget would be?
So, I don't know what adjective to use, frankly, but I would say that, it was a budget which was progressive. If I have to just use one word, it would be a progressive.
That's a beautiful adjective to have used. Yes. So the budget saw quite a few. I mean, I know you are your portfolio is very well diversified, and you're somebody who believes in a very well balanced portfolio. So I'm going to ask you something about the MSME and the socks that we're giving to it, right? I mean, we had announcements on the ease of business, the 9 crore infusion on the credit guarantee scheme. Do you think 2023 will be the year for mid cap and small caps?
So, there are two aspects to it. One is the economy and the second is the stock market. So I think from the economy perspective, we have to understand the structure of the Indian economy. One, we are a very diversified economy. We have presence across sectors. We are not like Russia, which is only oil and gas, or Brazil, which is only commodity, or China, which is now public sector undertakings. India is very diversified. We have financial services, IT, pharma, auto, cement, infrastructure. Across the board, we have companies. And we are also an entrepreneur-driven economy. We have the highest number of listed companies in the world. We have multiple small businesses. And I think for the economy to grow, these entrepreneurs have been the one who have contributed a lot. And I think the government and the honorable finance minister recognizes it, and therefore this impetus towards support to MSME is always there. Now, for the last 2-3 years, we are seeing massive support to the startups because we can see the startup culture and the entrepreneur culture coming up in India. We have a tax holiday which was extended again for the startups. So if you look at all this, I think the stepping stones towards creating an entrepreneurial kind of an environment has been the focus area for the government. Now, coming to the markets, obviously mid caps and small caps tend to be more volatile as an asset class. They tend to grow faster because they are entrepreneur driven. At the same time, they tend to be volatile. And after a phenomenal 2 years, 20 and 21, we have seen consolidation in 22, where small and mid caps have underperformed slightly. And the trend has to some extent continued in the first 1 month and 1 day as we speak. However, given the nature of the how they are structured, they tend to grow faster than the large caps. And therefore, our view is that if there are investors who are willing to take the I would say pain of short-term volatility, we are quite optimistic about about this segment.
Okay, thank you, sir. So there was a lot of focus given even on ESG in terms of moving towards green hydrogen adoption by 2030. Do you think this is the right time to start looking for stocks in that sector from an investor perspective?
So let us keep the ESG on the side for a moment. I'll come to that. But green energy is a key component of ESG. But green energy is also very important for India. And I'll give you the reason. We import almost $200 billion worth of oil. Almost 80%, 75% of the oil which we consume is imported. There's a huge reliance on just one second. There's a huge reliance on imported fossil fuel. And I think India suffers when oil prices go through the roof. Our foreign exchange reserves get a drain, rupee goes for a toss. And therefore, this move towards non-fossil fuel anyway is economically very necessary for us. So after wind, solar has come in a big way. And solar is now turning out to be much cheaper than even fossil fuel. Whichever company we speak to, almost unanimously, they are looking at having at least 30-40% of their fuel requirement or power requirement coming from non-fossil fuel based renewables. So I think from an India perspective, if this encouragement continues, whether it is solar or forward-looking, non-fossil sources like hydrogen, it will lead to the country becoming very strong, because then we will not be relying on fossil fuel to the extent which we are relying now. And last 1 year, particularly Europe has seen how reliance on Russian oil has just messed up their economy. And obviously, India would not like to get into that situation. So, ESG apart, I think this move towards encouraging renewables and hydrogen anyway is economically very necessary. Now we come to the ESG part. Obviously, leading because of this move towards non-fossil, we are taking the environment part. Social in a developing economy is difficult, but India has the relevant rules and regulations. And I think on the governance front, India has made massive strides. Obviously, no country will or no economy will have 100% of their companies and investors and residents being fully compliant. There will always be some black sheep here and there. But I think by and large, India is moving towards a good mix of compliance as far as ESG is concerned. I would say that from an investor perspective, ESG should not be taken separately, but every investment they make, at least they should evaluate to what extent that company is ticking its boxes as far as ESG is concerned.
And help build towards a more sustainable India. So on the move to green growth, to move towards that, adopting EV vehicles is quite necessary going forward. Like you said, we need to reduce our dependence and the imports of oil. So there were some, reductions on custom duties in, with regards to the lithium-ion batteries. But, EV vehicles are still a little too expensive for the common man, for most of common man to afford. Given all of these steps that are taken in the budget, do you think or the auto industry would be able to produce and sell them at a lower cost anytime soon?
So, one is the incentive which obviously the government is trying to give to expedite the adoption towards EVs and other, as I said, non-fossil fuel related products. But what happens, the cost is also a function of time, development, and adoption. So if you're able to sell, say, 10,000 vehicles in a month, and if you're able to sell 100,000 vehicles in a month, obviously the moment you reach 100,000, your cost will automatically fall. Solar, when it started, used to cost 30 crores a megawatt.
Yeah.
Then it fell to 25 and then 20. Now it costs 4 crores. So now it is becoming commercially viable because as time goes by, more and more development happens. And as volumes increase, automatically the cost of production also reduces. So, to incentivize the first time move, obviously you have to give some freebies and some incentives. But as the volumes increase, they will anyway become commercially viable. So I think it's a step in the right direction. The government is incentivizing them. They also, give other benefits, both the central and state. And now the acceptability of a consumer having a four-wheeler, which is an EV four-wheeler or EV two-wheeler, has increased manifold. And the direction is very clear. We are all going to one day move towards that.
Okay. So I'm going to ask you just one last question before we wrap up. So FM has been pushing towards, everybody moving towards the new tax regime. Given this, do you think it would deter people from investing in ULIPs and ELSS schemes?
So, yes, the new tax regime does not have incentives of ETC where investors would, where, the taxpayer would invest in, say, a LIC, a insurance product or a PF product or even an ELSS scheme. And to some extent, you are right. It might. But, India anyway is developing as far as an investment mindset is concerned. So it will take a long time. And, irrespective of the tax benefit, I think every Indian should have a reasonable term insurance. So maybe the term insurance side will not have that much of an impact, but instruments which were predominantly, manufactured from a tax, saving perspective, there you might see gradually some less, I would say, traction, only from a tax incentive perspective.
Okay. So thank you so much for your time. It was really lovely talking to you.
My pleasure. One last thing, I think we have seen the budget, at least from our side, very positive. The markets corrected for non-fundamental reason. Our view is that would also settle. But we would view this as a great opportunity to invest from medium to longer term perspective.
Yes.
Thank you.